Hi everyone, hope you're all doing well, and today I'm going to talk about a UK stock that I own and one of my biggest UK holdings, and it has had a couple of bad months now. And because it's had a couple of bad months, I've had a few people asking me what my thoughts are and what has anything changed with my investment with this stock. Now, it is going to be about one stock, but I think the information that I'm going to put on this video will be useful for whatever situation you're in. And this UK stock, I want to make a dedicated video to it. I actually talked about this on the back end of a video, I think for like 2 or 3 minutes. But now I've still had a lot of questions about it. I want to give it its full video and kind of explain what I think about this and the situation. So like I said, it's going to be about one of my biggest UK growth stocks, but at the same time, even if you don't own shares in this, I think that this will be a very useful situation for when the share price does get a little bit choppy and what to do. So yeah, we're going to take a look at this stock. So in general, a lot of the growth stocks are really struggling in the last couple of months. You probably know this. If you have a growth stock, you will know that there's been a lot of growth stocks that have been struggling. Some that I own, some that I don't own. For example, like Lemonade. Lemonade's had a bit of a tough time recently. Fiverr, once again, we've gone a 6-month period. Once again, bit of a struggle since August time, really. We've gone Palantir, once again, down 4% yesterday. A lot of the growth stocks, not just the ones that you probably own, but in general, a lot of growth stocks are really struggling. Now, this stock is a UK stock, but it is a growth stock, so it seems to be struggling with the growth sell-off that we do have at the moment, which is S4 Capital. So S4 Capital was my biggest UK holding. Recently though, Boohoo has overtaken it in the last 2 weeks, so it's actually now my second largest holding behind Boohoo, but still it's very close to being my biggest holding. But we're going to take a look at S4 Capital. So S4 Capital is a stock that I've owned since February this year. And since February time this year, I started buying in, and then we did have a bit of a fall off. The share price fell off, and then all of a sudden the share price went on a very good run. So you can see here, from here, the share price went all the way up here, and we were about 80% up on this position. But what has happened over the last few months, or especially the last 2 months, is the share price has gone down 23%. So we have had a bit of a mini crash going on in the share price. Now, because of that, people are getting a little bit worried about this 23% drop, but I'm going to go through my thoughts on this today. Now, the first thing I'm going to say is put the drop into context. Let's not forget this year has been an incredible year for S4 Capital. Since buying this stock, it has been one of my best performers this year. Like I said, been on an amazing run. And even with the share price drop right now, we're still up nearly 35% on this, which is still a pretty good return. And for an investment that's about 10 months old, to have that return is still pretty good. So I'm not too worried from that point of view. That you've got to put into context that we've still been on a very good run this year, and we're still up on this position. And one of the big things you've got to weigh up is previously, what is the justification for this share price jump? If we go from here back to 52 highs, that 80-90% share price jump, you've got to think that was in a 6-month period. You've got to weigh up, okay, in the last 6 months, has S4 Capital done something to justify a 80-90% jump in the share price? And that's what you've always got to weigh up. You've got to realise, and I was saying this previously on the YouTube channel, for me, I looked at S4 Capital and thought, it's had a really good year. It's probably a stock that deserves to be up, 30+%. But when we start talking 80% plus up, you've got to think, even me that's bullish on the company, I can't justify a situation like a Tesla where a company adds in 6 months that much value. And that's what you've got to weigh up. You've got to look at the long-term picture rather than what's going on maybe in the last month. Last month, yeah, sure, the share price has fallen off a fair bit. But why is that fallen off? Is it fallen off because we had the share price jump, which was a little bit too ambitious, should we say? That's what you've got to weigh up with S4 Capital. Now, going back onto the fundamental point of view of this company, is that it has had a fantastic year. Don't get me wrong. The earnings that S4 Capital has put out this year have just been beat after beat. The outlook has just been raised and raised. And let's not forget, we came into 2021 basically expecting this company to probably put in 50% revenue growth. We look here, we jumped from 342 million, we're going to be up to 656 million. So this company was previously, we were expecting maybe somewhere around a 500 million year in revenue point of view from this company. And yeah, I mean, look at it, it's absolutely smashed the revenue numbers. And the great thing as well is, like, it's not even really burning through that money, and sooner or later that profitability is going to start creeping in as well to this company. So you're going to have a bit of a revenue growth company, and as well you're going to have a decent amount of profitability coming in. And we'll see if it does do that then next year. We'll see, because obviously they really focus on the revenue growth. But I mean, even when you start, if they do 55 million profit and you start working that out, that's actually really good. That's a growth company with a little bit of profit and really good revenue growth. I mean, these sort of companies do trade at a really good premium. You only have to look at the likes of a Shopify, for example. So really exciting. Financials have been absolutely amazing and a really good year. So when you look at it, you've got to look at the stock and you go, the financial improvements need to be reflected in the share price. Like, the share price should be up on SFL Capital this year. There's no way this company should be valued at what it was at the 1st of January this year. The share price shouldn't be the same as where it will be at the 1st of January 2022. Like, the share price should have the reflection on the improvements in the company. Now, the big thing you've just got to weigh up is how much of a reflection should that be? Should it be the crazy jump, or should it be a bit more of a realistic value? And that's the big thing. You've got to look at the big picture and decide what is a realistic value for this company, or what is a realistic jump in the share price. And that's the big thing for me. I've always said that SFL Capital has just got a bit too ahead of itself. And I've said that multiple times. It needs to have a phase where it just goes up a little bit, or we just consolidate for a bit. If you don't have that, at some point you will have that snap reaction of where if it keeps going up, eventually boom, it falls off. I mean, one of the big popular ones was Upstart. Upstart just went up on a crazy amount this year. Boom, it lost like a third of its value in like a couple of days. They cannot just keep going up. They have to eventually trade off what the company is doing on the number side of it. The share price can do anything. It can go up, it can go down, it can go up a crazy amount, but at some point it has to reflect what the company is doing. And that's the thing with SL Capital. It was reflecting it, but in my opinion, what happened is it just started to get a bit too carried away instead of just consolidating. So the big thing for me right now is, when I look at the likes of an SL Capital, the best thing for this to do is have 6 months period where it just stays around here. Just let that valuation, the company fundamentals, to catch up to that valuation, and we should be okay. And this happens all the time, and that's what you need to assess with a lot of your investments. So I've drawn 3 different share price projections here. So we've got the green one. The green one is the right price move. The company is growing profit or revenue, and everything's moving in the right direction, and that should slowly tick up. Now, realistically, that never really happens. There's never really a point where the share price just nicely ticks up. There's only ever a few stocks that I can name where the share price always just moves the right amount with what the company's doing. Realistically, if we had the share price going up, what happens is you zigzag in and out of it all the time, and that's what happens. I think Microsoft is probably one that stands out with that. Maybe you could say InMode. Those are the 2 that come off the top of my head where the share price moves the fair amount to what the company's doing. In between that, there'll be other companies that just shoot up way too high, and there'll be companies that just shoot way too low on what the company's doing. So on the green one, you're moving in the right direction. If you're moving in the right direction and everything matches up, you're probably happy to kind of, hold your stock, just let it do its thing. Everything's really nice. It's a really lovely stock to own. It doesn't always happen like that though. And then there's the other 2 ways that the share price can move. So if we have the black one here, if you look at the black one, okay, everything's going really good, but boom, we shoot up out a crazy amount to where the fundamentals are. Now, when you have that, which I believe an S4 Capital has done that recently, is then you've got to justify, okay, we've had a massive jump, 100% jump in 6 months here. Is that matching what the company's doing? Not really. So you've got to look at that and go, okay, if we have a bit of a too crazy jump from what the company's doing, you've got to go, okay, how do I manage that situation? Now, if you want to, you could go, okay, you know what? I know it's crazy overvalued. I'm just going to hold it though, and I'm happy for a pullback. And you're aware of that situation. The other thing you've got to weigh up is that, what could happen actually? What I should really add on here is that what then might happen is then you have to flatline for ages for that value to catch up. But what you can do here is that in this situation, then what you're probably going to do is you're going to look at probably trimming, taking that little bit of risk off while that valuation catches up. You might look at trimming. Now, for me personally, I have sold SFL Capital once this year. I think the last time I sold SFL Capital was around summertime, and all I did was just take 10% profit off the table. I just sold 10% of my profit, think, okay, everything else I'm happy to just leave running, but just going to take that risk away. And that's why maybe when you have them share prices that just out of nowhere jump up, there's never anything wrong with just taking that risk off, taking a bit of profit. At the end of the day, we're all here to make money, and if you have a stock that shoots up and you're like, not sure if that share price is fair, nothing wrong with just releasing a bit of that profit off the table, you know? So that's what I've done with SL Capital a while ago, is I took 10% of my position, the rest I'm happy to let run. And now we're kind of having that kind of rebalancing of where the share price should be. Now there's the other way that this happens, and what happens is the share price goes up, but then it doesn't start matching what the fundamentals are going. So in that situation, you're probably going to buy more. And that's what you have with a few stocks. You have stocks where you look at the share price and go, that's not matching that. You know, the likes of Gang, for example. We talked about Gang yesterday. Gang is one that a few times we've had it move in the right direction, and then it falls off, and you're like, but that's not matching. And those are the situations where you're probably going, well, I'm going to buy more then. Now, what is actually happening, I would say, with S4 Capital is that we've probably had this, but it hasn't got crazy overvalued, but it has probably got a little bit overvalued. And we're probably starting to just tick to about here. Now the point is where eventually we're going to get into line, and hopefully we move in the right direction, or we just flatline for a bit and just catch up and go up. But you know, if S4 Capital does get to the position where, okay, we get to the right value, but then actually it starts going lower like this, then what do you do then? Well, you're probably going to look at that situation and you go, okay, I need to buy more. Because if S4 Capital keeps going down, then you're looking and go, oh, but the company keeps growing in revenue at 100%, and now we're back at 2019 prices or 2020 prices, and we're in 2022. That's a situation where you buy more. And it's all about managing that risk and reward, and the upside, the downside, how much that run has been on, just managing that situation. So when I look at S4 Capital, I've had a few people going like, it's had a rough couple of months. But why has it had a rough couple of months? Because the share price has been fantastic this year. We can't have stocks that just keep going up all the time. It's the same with stocks going down. We can't have stocks that keep going down all the time if the stock's moving in the right direction. It's got to have that fine balance. And with S4 Capital, there's a few people that are like, it's down a little bit. Yeah, it might be down a little bit, but you got to remember how good the stock has performed this year on the share price front, and the fundamentals is starting to move pretty much back into a fair direction. Now, if it does go down even lower than this, what are you going to do? You're probably going to buy. If we go back down to the prices at the start of this year, if the share price goes back down to the share price that it was at the start of this year, I mean, obviously that screams a buy, doesn't it? So that's where you got to weigh up. You just got to weigh that risk and reward up. So yeah, I hope that was useful on S4 Capital. And like I say, even though if you're not an S4 Capital shareholder, hopefully that just managing the risk to reward here was useful anyway. So if it was, hit the like button if you're new, subscribe, and have a good weekend, and I will see you on Monday.